Yeah, so good morning, everyone. Today we have a trade setup lecture, and in this lecture we'll try to basically understand how trading can be done in different time frame. So before we start and before I give you the agenda of today's session, let me wish all my students as well as the viewers a very happy and prosperous new year. The most important part is to understand how to trade and how to invest both at the same time. Right. So today's lecture we are going to focus more on trading, and there are many conundrums and there are many confusions what people face in trading. So let me first give you the basic rules that you should basically follow in trading. So first, let's list down rules for trading. So the first rule, which at Trading Campus we normally follow, never trade future. Right. So this is the most important rule to understand, where many people say, how would I take leverage if I cannot trade future? Right. So how will I make tons and tons of money? But the first agenda is never trade future. The second is, if you cannot trade future, we need to first trade in cash market. So we are basically focusing on cash market trading because this will basically give you a foundation to start trading. So trading which should be basically used in cash market first, and then you should start moving to the other step. So if you are successful here, then you should basically go out to the third step, where you can now move towards options. Right? And why I try to tell everyone is not trade future. The same future agenda can be done in options, but the biggest part of options is, if you are very bullish, you tend to buy, let's say, 5 lots, 10 lots of Nifty. The same can be done by buying 5 lots of call option. Right? So the first thing is to practice basically on cash market, and once you are successful or consistent, then I think we can apply it on options. So that is why trading is actually simple, but the problem here is people straight away jump on futures. So that's where they lose a lot of money. The risk management is not in place, and straight away they start trading options. Now 95% of the retail traders basically lose money in options. The reason is very much clear, because they normally only tend to buy options. Right? So that is another problem in options. You cannot make money just by buying options. Right? So you need to have different strategies, and during the month you need to have follow different formats of strategies in options too. So the first rule is never trade futures. Start trading in cash market, become very successful, and once you gain confidence, the same amount of money that you have made from cash market, you can deploy it in options. Right? So that's the first set of rules that everybody should follow. Now after the rule, we need to basically understand the process of trading. Now what do you mean by process of trading? Now try to understand, if you want to make trading as your business or a career, obviously you need to give a lot of efforts, but apart from that, you need to develop your own successful trade setup or a successful process. Now every good trader will basically follow this process. They normally have 3-step process. The first in this process is to know your trade setup. Now you should be very clear about this trade setup. So today's session is more about the process and how to locate our trade setups. The second part, so let's say I have identified my trade setup and I know how to trade or when to trade. That is very good. The second part, which is very important, is called as scaling. Right? So once I know everything and I've started making money, I'm confident and I'm consistent, the next step comes scaling. Right? So in simple example, I'll tell you, let's say as per this, you are trying to always trade with a trade value of 1 lakh rupees. So every trade you used to make of 1 lakh rupees. Okay, and that means if you're trying to lose even 5%, you lose 5,000 rupees. The point here is, it is very easy to trade on 1 lakh. The thing becomes difficult when you change your trade value. So you change your trade value from 1 lakh to 5 lakh, and then you change it to 10 lakh. Now why it is very difficult? The problem here is, when you scale, your P&L will also change. Now what many people do, before finalizing their trade setup, before knowing what they are good at, they start scaling. Right? And scaling again brings them down, because when you were normally trading on 1 lakh, now suddenly you start trading of 5 lakh. Now what will happen? Obviously, you are losing 5,000 over here. 5 times means you will be losing 25,000 over here. So the most important part is scaling. Even if you go through the step 1, you become a step 2 player, where in step 2, the most important part I'm trying to say, even 95% of the successful traders fail. So from step 1 to step 2, okay, even if the best traders, which is like 5% of the entire crowd which is there, when they come to scaling, even them 95% of the traders fail. So the most important part is scaling, right? And then you have the third part, which is called as risk management. Right, so the third and the most important part in all trading style, they will always say risk management is the key. Now the point here is, in our rules, we are trying to focus on options. Now when you try to focus on option, you know your loss. That's the beauty of options. So if you're trying to buy, you're trying to make a strategy, you know your loss, right? So you're basically not writing options over here, because writing options has unlimited risk associated with it. But when you try to buy options, you know your loss. Now, when you know your loss, you do not need any risk management, right? So that's the successful mantra. If you want to leverage, go in options, not in future. And second, once you go in options, you know your loss. A trader knowing his loss, okay, can only sleep properly, or I can say he can also think properly. So if you're not making a loss, a huge loss, what will happen? One position, if you make a loss, you know your loss, you are prepared for that, and then you go for a second trade and your mind is again fresh. So that's where I always focus on options, because risk management is very, very easy for me. So the point here is, step 1 is very, very important, and step 2, scaling is important. So for third part, we don't have to worry much, because options take care of that. Apart from all this, the best traders, when they start their journey, okay, they always maintain something called as trade book. Now, this seems to be very silly, and I would say those people who follow this can basically scale it very, very fast. Why? What is there in trade book? In trade book, you need to mention your trade, right? So the point is, even if you do intraday trade, you take weekly trade, you take result-based trade, whatever trade you do, you need to write your trade and you need to explain, why did I buy or why did I sell? If you are not able to explain why did you buy or why did you sell, so example, if I told someone LNT is very, very good, hence I have bought it, because 10 people have told me LNT is forming a good chart structure, or maybe ABC, fundamental news, or whatever you have got into it. The question here is, if you cannot understand why you have taken a trade, just depending on others, if you take a trade, it will never be fruitful. And the second point is, as I said, you should start in cash market. You need to know your trade setup, and then you start placing the trade. So the biggest point of trade book is, in your trade book, you have to say, why have I bought and why have I sold? Now try to understand. Try to review your trade book on weekly basis. So in a week, you will come to know how many trades you have failed. And it is good that you fail more, because if number of stop loss is hit, okay, this will explain you the setup that you are working on is not playing properly, or what are the flaws in this setup. So that if this setup is there and I get into a trade and it is keep on hitting stop losses, that means something is wrong with the setup, or my entry is not exactly to the point. So you need to first understand, after knowing the rule and the process, once the process is in line, you need to follow the last part, which is trade book, right? So the trade book is the most critical thing for a trader. Okay, so this is very, very important, and normally people follow it for a couple of weeks and then they do not follow writing it in the trade book. So that is why it is very, very important. Now, after understanding the rule and the process, now let's get into our session today. Today we will try to focus on different formats of trading, right? So many people are confused. Sometimes they trade intraday, sometimes they trade positional, sometimes they trade only on the result. So it's like there are different varieties of trade setups or trade formats. Now let's first classify them. So I would basically say you have trade setups in 3 formats, right? So we are trying to keep equity over here on our concentration, not commodity and forex. So trade setup first can be intraday, right? So the first kind of setup is intraday, where you buy and you sell within the day. The second format of setup, if you try to go out, is positional, where you hold it for 2 to 3 days. And some people trade from Monday to Friday. So a weekly trade, we can basically call this as. So it can be a 2 to 3 day trade. And the third setup is basically for a longer horizon. So we can basically say result based trade or 10 to 15 day trade. Right? So obviously there are people who also hold it for quarter to quarter. So we are not getting into that right now, but more or less the trade setups are classified as intraday, 2-3 days position, and then you have result based trading, or you're holding your position for 10 to 15 days. Now try to understand this. You need to first define whether you are in sector 1, whether you are in sector 2, or whether you are in sector 3. Because all three require different mindset. Okay, no one can stop you to basically try out 1, 2, and 3. Right, so you can try out all three of them, and you need to come to a conclusion that yes, I like intraday, or I can focus over here, or I like this and I can focus over here, or somewhat I like the third part. Now in this 1, 2, and 3, you need to understand the most difficult is intraday. Right? So many people tend to trade intraday, but it is difficult. But if you get a grip on intraday, right, it is a cash flow machine which can keep coming in every day. So this can bring bread and butter to the table, but please understand it takes lot of efforts. It is not that easy, right? So second part, 2 to 3 days positional trade if you want to make. Again, it is simpler than the intraday format, right? So it is simple than the intraday format, and the third one is more simple than 2 to 3 day trade or intraday trade. So from you can say the difficulty point of view, or you can say which is the biggest mountain to climb, it's intraday, and then you have 2-3 days, and then you have the result day. So let's now classify today under each of these segments, okay, which charts to look into, what kind of candle pattern or gap theory or indicators we should focus when you are trying to focus on these three formats. The first one that you try to focus is intraday. Always focus on price action. Right? So this is the first thing which you need to understand. Price action is the only key for intraday. So you cannot rely on indicators, maybe somewhat about EMA and all those kind of stuff. But the most important is to see how the price is moving. So price action is very important. In price action, you can have gap theory, right? Because gap up, gap down, all those things are very important. You can also have good candle patterns. So you need to also decide which candle patterns you want to focus on. And after the price action, there are two more things. One is called as volume, right? So many people also trade if the volume strength is also there in that stock or not. And if the price goes up but without volume, they think that momentum is not there to carry it along and all those kind of stuff. So volume can also be focused on. Apart from volume, people also focus on open interest. Right, so OI is what people can also look into, and the last is implied volatility. So this is just coming out from options data. So IV, volume, and then you have gap and candle patterns. Now in intraday, many people also try to focus on through some indicators. Let's say divergence. So this is basically called as RSI divergence, right? So hidden divergence and bullish and bearish kind of divergence. And we also try to add on this with pivots, right? So you also have divergence pivot kind of setups where these gives you support and resistance, and this gives you whether there is a small change in the formation of candles or formation of base, where this guy helps you to initiate a trade. So when I'm looking on intraday, you need to understand there are different paths to climb the mountain, right? So I'm not saying you have to look at A, B, C, D, everything, and then you take a trade. If you try to focus on all, you won't be able to trade. Please understand. So, right, so do not try to make a mix of everything. Try to focus one at a time. So example, if I'm only focusing on gap and candle patterns, so it basically gives me a complete price action information. Second part, if you want to focus on open interest, complete open interest change yesterday, and that is why this stock is what I need to focus tomorrow morning, or a good volume has been seen in the pre-market, post-market, or the first 1 hour, and that is why I want to trade. So this can also be kind of catching a momentum trade. Then you have stocks where the implied volatility has gone down, right? So last, let's say for 10 days or 5 days, the volatility has gone down, and then what happens? All of a sudden, today is the day where the big move comes, 2%, 3% up or down kind of stuff. So you need to understand